This looks like a crash, but the bigger picture says something else. Every level that I'm gonna show you here are the same that I'm watching for my personal trades. So today we're gonna take a look at some economic outlook, some on-chain data analysis for crypto, as well as Ethereum, XRP, Solana, and of course, Bitcoin. Welcome to Crypto Predator, hit the like button and subscribe. So after a massive rally on the Bitcoin price at the beginning of October, to be more specific, as soon as October started, now everyone is a little bit worried by the fact that the price has just touched previous all-time high and then it seems like it is going back down. And I know that this looks like a big crash for those who are only watching right now if you're new to crypto, but if you take a closer look right here from the broader perspective, ladies and gentlemen, what we had right now was just a 4.25% of drop. Back in the day, we used to have around 15, 20, maybe 30% of price falling. So now you might be wondering, all right, are we going to continue to drop? But here's the thing. I think that we are going to continue to the upside. And I'm going to show you exactly why. From the cycles perspective, we had the previous daily cycle low at around this region right here on the beginning of September. And then we had the weekly cycle low that took place before this blow off top at around the end of September, beginning of October. The next window for the daily cycle low is going to happen at the end of October, beginning of November. So when it comes to significant pullbacks like we have seen around here, I don't think this is actually the case. This is the first reason. The second reason is the M2 Global Liquidity Index. Although we are still trending down the M2, we are still above the 3 level in the M2 growth and borrowing rate. And I think this is a really significant level because I believe that from here we are actually going to go up, which now begs the question, why do I think that the M2 rate it is going to continue to go up? The first thing is that the economic outlook. As you know, we are still in the US shutdown. So all the market participants are trading regardless of economic data. So any further news event that's going to give a hint about where the market is going can be bullish feel for the risk assets. One of them is actually the peace deal between Israel and Hamas. But here's the thing about the Middle East. I don't think this is actually sustainable. I mean, come on, we're talking about the Middle East. This is a war that has been going on for over centuries. What's gonna happen right now about this peace deal is the same thing that happened early this year between the US and Iran, when everyone thought that the Third World War was going to happen. So yeah, in fact, we might have a peace deal, hostages might actually be released, but we have no idea if the war is going to continue a week after. So to be quite honest, I'm not giving a lot of support to this kind of announcement here. This is not actually bullish, especially in the mid to long term. Maybe in the short term, but this is pretty much it. And as I previously said, we're gonna go over for the following weeks without economic data. But there is something that the market always does regardless of the US shutdown, which is pay close attention to what this man is about to say today. So I think that everyone is going to look for leverage hints in how Powell speaks tomorrow. And that of course is going to bring a lot of volatility to the market. And I dive into the minutes of the FOMC minutes in order to give you a really good perspective to crypto traders. What can you expect from that? And here's the bottom line. The minutes reflect a gradual policy transition. The Fed is no longer focused on fighting inflation, but not yet ready to flood liquidity. So here's what I expect on the near term. Some range-bound trading. Macro supportive, but not actually catalytic, especially until the next rate cut, in which, let's be honest, we know it is going to happen. But if you know, you know. Just because you're gonna have a rate cut, it doesn't mean that's gonna be bullish. Context is everything. In the medium term, the bias is actually bullish, especially if the labor data keeps softening and the Fed confirms a sustained easing path. So as I explained previously in my videos, it is not a panic cut or a recession cut, not yet. But I do think that we are already in a recession, although the cut itself is actually a normalization cut. Slowly but gradually, the liquidity is actually loosening based on the US 10-year yield. Labor data keeps getting worse, while at the same time, inflation is still a little bit high, but let's face it, it is quite under control, as it has always been since the beginning of the year. That's why we can still see some liquidity being put into the market, but the balance sheet of the Fed is still a little bit tight. And this is where the key shift is going to happen after the rate cut. Until this balance sheet does not start quantitative easing, we are not going to see an actual parabolic move. Based on all that, that's why I still think that we are already in a recession. They just didn't tell us yet. And right now, to add even more confluence by the fact that we are still going to range a little bit before we continue to go higher, is the fact that the dollar index just hit a 17-year support band. And according to the FOMC minutes, the dollar index had generally stabilized and that the dollar returned to trading roughly in line with the fundamental macroeconomic drivers, which by coincidence, take a look, is just hit the support band. So we can expect some bouncing back of the US dollar before it continues to go down. Now you might be wondering how much further down can we go? And this is exactly what we're going to take a look right now. So during the pump at the beginning of October, we had the formation of a couple of imbalances and the 4-hour order block right here at this region, until the price reached the previous all-time high at 124.447. But since the price was strongly rejected at this region right here, we want to know what could be the next point of interest so we can place our trades. So we're going to take a look at here at the current swing high and the current swing low, in which I believe that if the price passes through this level, the context is going to switch bearish. We already had a small change of character right here at the smaller time frame, confirming that we have a bearish bias in the short term. So we already had a liquidity sweep at this region right here, which was previously an imbalance, and a strong possibility of an order block, a strong point of interest will be at this region right here. So now the question is, which of those two order blocks present the higher probability of placing a trade? And since the beginning of October, we have a huge accumulation of bullish liquidity right here at those regions, especially here and here. However, if you closely look at the liquidation here, you're going to notice that this region has more liquidity than down here. Plus, we also have a liquidity gap at this region, so the price to continue to go to this downside, it should be a lot of selling momentum from the upside. So I believe that the region at 120,000 level is a strong possibility of a liquidity sweep, which is around this level right here, which in my opinion makes me think that this region at the 118 is a strong possibility of a sweep before we continue to the upside. We also noticed that the fear and greed index switched from greed back to the neutral level, and that can give us some opportunity for, who knows, for the index to get back into the fear level, so we have some buying opportunity. And in order to get to this fear level, I think that's gonna be this region at the 118. And here's the main reason why I don't think that the price will continue to go further down. We have a huge amount of ETF inflows going on Bitcoin, which is going to help to hold the current bullish positions. So for Bitcoin, not at the 114, 118, a really strong possibility. Now, let's take a look at Ethereum. Ethereum is following a similar pattern, but I think that at this level, at the 4,200, 4,100, maybe is a strong possibility for Ethereum. Who knows, even a liquidity sweep at around the 4,000 level. For the XRP, I see a strong possibility at this region right here, and maybe a sweep as further as to the 2.80 level. Solana, I'm not so sure, to be honest. I still think that it is a little bit undecisive, I'm not very sure. So that's why I marked here these two swings, key levels, in which we're gonna actually have a confirmation of the bullish or bearish bias. Put in the comments how much further you think that Bitcoin is gonna go before we continue to go up, if you believe that's gonna go up. Thanks for watching, see you on the next video.